Hello again, this is Robert Schein, Managing Director and Partner at Blanke Schein Wealth Management. Today is Tuesday, September 15th of 2020. We've got several topics that the markets are paying attention to, moving markets today, so we're paying attention to as well. We're going to report on because you might not get them in your daily headlines, so thanks for watching. So one of the most important headlines that came out over last night's news cycle, markets are paying tremendous attention to, comes from China, and this talks about the rebound accelerates. Early Tuesday, key economic stats show that China's recovery has accelerated in August. This is huge because keep in mind, China is the second largest economy in the world. And outside the United States, they are ahead of us in terms of the infections in corona, therefore the curve itself and the curve flattening. So the real question becomes, does life exist, and is there a true economic rebound and a resurgence even post-COVID life? That's what markets are paying attention to. I don't know if you noticed lately, but the markets kind of touched the 50-day moving averages and bounced positively, and our trend still seems to be intact on an upward movement for all of the major indices, the Dow, the NASDAQ, and S&P. That could change at any moment, but we're going to keep an eye on that because that's very significant. Markets are not paying attention to our nightly headlines as it relates to corona. Okay, and in fact, the corona deaths, which really count, not the case count, not the daily case count, it's the deaths that actually matter, hospitalizations and deaths. Both those two, what the market pays attention to in terms of empirical evidence, is around the world, and those are going down, not up, which is very important. So markets are up as a result of that, but more importantly, the economic data is coming in positively. Major indicators include factory production, investment and property activity. They're all gaining pace, and this is tremendous because as much as the United States sort of has fits and starts and governments get in the way and out of the way, and economies trying to sort of get off its feet here in the United States, they're ahead of us. And watch this, the economic engine of America will get back. It will be bigger, better, and stronger. That's what the market's also betting on, with the bet on U.S. economy being up in tandem with what we see coming out of China. So that's not insignificant. That's tremendous information, and it's a positive on a go-forward basis because the market's looking through today's headlines and looking into 2021, even 2022, in terms of what the economy could look like. And in China right now, they are now greater than the pre-pandemic in terms of economic indicators, and the month of August just reported that. Now let's discuss the S&P 500, or all the indices. In the last couple of weeks, we saw, as I have discussed, a rotation within the market. We've had a pullback of 5 to 10%, depending upon which indices you're looking at, or each individual stock, if you will, is even more than that in some cases. But a 5 to 10% pullback is normal. In fact, what I counsel clients on, and we have these conversations in terms of market volatility, it's not uncommon to have multiple 5% pullbacks in a calendar year, and including an additional 10%. In fact, there's a report out this morning that showed just that since 1950, each calendar year we've had anywhere from a 5 to 10% multiple per year. So at least 2 per year since 1950. Every calendar year for the markets in terms of pullback. So that's absolutely normal. And in the professional money management world like we are in, and as we navigate through markets and manage portfolios here at Blanke Schein Wealth Management, we plan for this and we take advantage of this. And we also, those are great and welcoming opportunities that set up our client portfolios even not only short term, but on the long term, great opportunities for years to come. So we look for that. That's totally natural and normal. So it's nothing to be spooked about. And you have to see the key signals within to know if it's something like a normal pullback and a normal correction, like I mentioned with the moving averages, or if there's something greater from within. But in the professional world that we're in, we pay attention to this and we take advantage of it for our clients. So the next 2 days, the Fed is in watch. We're going to pay close attention to their language, okay? Like all situations where you have economic stress, even recessions, the Federal Reserve comes in and create some policy and some accommodations and some stimulus and ultimately liquidity to ultimately keep us away from a recession, depression, and keep employment intact, and then ultimately work on inflation later on down the road. That being the case, there's two things I'm going to pay attention to as markets are as well. Number one, on the short term, will they step up or will they provide additional sort of encouragement or signal to the economy that they're going to help out in the event that Congress fails to pass CARES 2.0 or even the HEROES Act, whatever they decide to call it. That being said, that's the short-term language we're going to look for. Is the Fed in position, ready and willing to help in a short term? If that happens, markets will continue to accelerate their upward trend. So it's a positive. Long term, and I'm going to continue to speak more to this, they might talk about this, their long-term forecasting, but right now it's really irrelevant because we still have an election to go through. Policy could change that could impact sort of taxation long-term, as well as regulation. So those two things really are going to impact what the Fed's role will be on a go-forward basis. So I don't want to spend too much time on that at this moment in time until after the election. We have more clarity and visibility going forward. But ultimately, the key will be, and the topic we'll be talking about is, it's easy for the Fed to get in on the front end to help out. The hard part is when they leave, when they decide to sort of take away the stimulus and start taking their sort of intervention policy tools and unwinding those positions. That's years from now, but as the economy heats up, that could be pulled forward. So the Federal Reserve might say, if the economy a year from now is dramatically stronger, and it potentially could be from where we are right now, I don't think anyone's really forecasting that, but I see some positive signs that could potentially take this economy to the next level higher. And there's a lot of reasons for that. That being said, that's when that Fed talk becomes increasingly more important to pay attention to on a real-time basis, because markets will have tremendous volatility in the years to come as the Federal Reserve describes to us what their intentions are in sort of supporting their policy as well as markets. So let's pay attention to what the Fed says and sort of guides on a go-forward basis. My last topic of the day, mergers and acquisitions. We get a lot of clients that ask this one question: Rob, are we now in a new secular bull market going forward? Okay. And some of the empirical evidence is, especially when you have a bear market, which is noted by a 20% drawdown or greater, which we saw from March to May earlier this year. Coming out of that, one of the key things that Wall Street and we do professionally look for is merger and acquisition activity. Why? Because that's increased speculation, that's dollars at risk, and that's encouraging sign that the economy and the future is bright, right? You're not going to place a bet in terms of a merger acquisition from company standpoint unless you have sort of some keen sort of sense on the go-forward basis that we're sort of in a positive economic horizon just past what we just saw in terms of a bear market. I firmly believe that we are in a new secular bull market going forward. One of the key empirical evidence cases that could be made to support this claim of my belief is that what we just saw this week. $69 billion announced this week in M&A. That's a whole lot of speculation in the marketplace. To put that in perspective, guys, in September, that brings the total to, if you add the 69, that's $146 billion for just the month of September right now, and we're only halfway through. That is an increase of 51% this same month last year, year over year. If you take the two previous months, so let's go to August and July. If you add those together, those 2 months had $269 billion of M&A activity in just those 2 months. So you take July, August, September, just half of September, and you're well over to you're almost $500 billion of speculation on M&A. That's in the IPO space as well, SPAC, special companies that they've set up as well, and we're seeing that be a lot of money being placed on that in terms of the pre-IPO range that we're seeing. That being said, we don't see that kind of activity in a bear market. You just don't. That also shows that there's a lot of conviction in Wall Street from several different sources, as well as companies on a go-forward basis. So this is another positive sign that, economically speaking, foundationally, we've got a good foundation to at least look towards and say, hey, wait a minute, how do you have conviction and know that the economy is going to be stronger in the future? One of the ways we think about that is look at follow the money, right? How the dollars are being spent. And the merger acquisition space is on fire, as well as the IPO space. Huge indicator, as has been in the past, of new, fresh bull markets. We'll see what this time will show and tell ultimately, but it's a very positive and quality sign that we see in our space in Blanke Schein Wealth Management. So thanks for watching today. Don't forget, tomorrow we have our election edition. We have Robert Stein from First Trust. He ultimately is the political insider so he's a lobby inside beat as it relates to political strategy. So he is going to be with me. I'm going to interview him over Zoom, and we have a lot of your client calls. A lot of clients already registered, so it's not too late to register. If you want a link to that, just email Nyan off of this daily update, and we appreciate looking forward to seeing you soon. Talk to you soon. Thanks.